It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Very much so. I do recall we had hundreds of townhouses sitting for probably close to a year. We could not get rid of them. They were probably $200,000 less than what they were built for and bought for brand new. So up until just before COVID, we almost could not give them away.
And in Brisbane, that is Rebecca Cuderman on the Real Estate Breakfast this morning as we launch into another episode with more of your property information as we connect you to the largest real estate podcast library across Australia every morning, 7 days a week. And you can stream us anytime on iHeartRadio, Spotify, Apple Podcasts, as well as Amazon. Well, it's a Monday. The weekend went way too quickly, always does, and we're up to March the 3rd. Deposit saving times worsen in most cities. Yes, if you are saving, it is a complete dilemma saving for a 20% deposit. It's become much harder in almost every capital city except Melbourne and Darwin. If you look at Adelaide, Brisbane and Perth, they have seen the biggest delays as surging house prices push first home buyer further and further away from their deposit goals. Now, if you just have a look at the time to save for a 20% deposit on an entry-priced home for a couple aged between 25 and 34 in Brisbane, if you look at the house time, it's 5 years, 6 months, and that has gone up by 4 months. And with the unit space, 4 years and 2 months, that's gone up by 5 months. So let's catch up right now since we're talking about Brisbane. Back to Rebecca Cuderman, a real estate principal in Brisbane from Logan and from NGU Real Estate. And good morning to you, Rebecca. Welcome into the Real Estate Breakfast. And first off, if you have a look at the amount of time, 20% deposit, it's up there, isn't it, eh? People have got to stress out a little bit to get that 20% deposit.
Absolutely. It feels like they're almost, really trying to chase their feet here. And it's quite shocking and unfortunate that so many young people are doing it tough.
So 2025, step us through. You're based there in Logan. So how's the market been going for you?
I guess it's been very, very positive in the sense that transaction sales are happening. Good stock levels have started to increase in comparison to years before. The market in the last probably month, probably ever so slightly, has stepped backwards in terms of number of inspections and buyers. But I guess that's a result of how much, as we've seen, especially in the deposit space, how much that price point's increased. So it really has jumped over the last 12 months, which is limiting our buyer pool ultimately.
Yeah, we talk about just how difficult it is just because of the price surge that has taken place in Brisbane. You know, Melbourne becomes a first home buyer's hotspot at the moment. And I think if you went back a few years ago, you probably wouldn't be predicting that. Melbourne is now one of Australia's easiest capital cities for first time buyers to get into the market, with entry-level prices increases remaining relatively modest, while other cities face record-breaking price hikes. I mean, Melbourne's market has softened, and it does create a unique window of opportunity for buyers. And we have heard of these cases, Rebecca, where somebody from a Brisbane has decided to up and leave and go to Melbourne. Now, you're there in Logan. You don't want to hear that. You want people to go to Logan, of course, and buy in your area. But it is attracting people from Queensland to make the move.
100%. I've seen it actually quite a few times now. Obviously, it was quite the opposite in amongst COVID. We were getting all those Melbourne people relocating up here. But over the last probably 12 months, I've actually had quite a number of clients relocate back to Melbourne, whether it be to build or just secure something else for an investment.
Yeah, part of the problem is when you have a look at this figure of Brisbane's entry-level house prices, they have jumped by $300,000 in 5 years. I mean, that's pretty reasonable.
Yeah. At the same time, I guess 300 grand over 5 years, it's a hell of a lot of money for someone to be able to try and save to get into the market. A lot of those people are now getting a lot of assistance, or needing a lot of assistance, I should say, to be able to actually make up that shortfall.
Yeah, and just in terms of Adelaide, if you're wondering, the entry-level house price there has soared $377,000 in the last 5 years to $689,000. Now, we spoke to Nicola Powell there from Domain last week, and she was saying that Melbourne's slower property market does give the first-home buyers a better shot at home ownership. The question I got for you, though, is, how do you counter that in the Brisbane market? Because it's almost impossible, but you've got the loyalty factor. You've got the job market where people will just say, no, I'm not moving. I'm going to stay here because my job, my family are here. And then on the other side, you do have these people that are moving, but very difficult to sort of counter what is happening in Melbourne.
I guess countering probably isn't as common. To be quite frank, we've lost a lot of our investor market to Melbourne. I do feel a lot of those clients that were once investing up here in Brisbane, positive cash flow properties, are now looking at Melbourne as an option. However, I'm not seeing too many families or first home owners that have really been brought up in this area look to relocate. So I guess those that have born and bred in Brisbane, they really love the location, the area. They can see the growth factor there with the Olympics coming. It is something that's a challenge to get into, but there is a lot of still potential for our market, whilst, upping and leaving and moving into state's quite a daunting factor. Probably something that investors are not opposed to in comparison to someone that's really had their life here in Brizzy.
Now, I don't like to sort of harp on about this because it is on the minds of everybody, and that is these rate cuts. But when you think that, okay, 2025, we're probably going to have, I think my forecast is at least three for this year. We've got one down, so another two. Definitely can see that happening before the end of the year. But in terms of the price market being a little bit more difficult for those first-time buyers getting into, how much of a mindset did that change in people's register in terms of first-home buyers with that 25 basis points off, with the notion of, hey, probably more to come?
I think a lot more confidence has been brought back to the market, which was probably lacking over the last, say, 2 months. And, if we do see another two, which I'm sure we will eventually, again, that confidence to just make a decision and hurry up and get into the market will be there. Probably similar to what we had, I guess, that push during the midst of COVID. Everyone assumed it was going to start dropping. It did quite the opposite. People waited for far too long. I think that will be a similar, I guess, trend now, given the fact that it's been the first cash rate in number of years now, really, cash rate reduction, I should say. But yeah, I do think price-wise, there might be a slight change given the amount of confidence being brought back, slightly more purchases entering into the market. But it is really going to depend on the amount of stock also coming to the market, which again has been at an all-time low up until more recently, and it is starting to now increase.
All right, well, we're talking to Rebecca there in Brisbane from Logan this morning. When we come back, we're going to be talking to Rebecca about the townhouse market and what is standing out there in Logan. We'll talk about that after this.
It's your weekday real estate breakfast with news, interviews and predictions every morning on the Real Estate Podcast. We are just as addicted to property as you are. The Real Estate Podcast.
And it is a Real Estate Monday. We are in Brisbane talking to Rebecca Cuderman. She is the principal there from Logan. And Rebecca, you were telling me that you've got something a little bit unique in your market, and that is a reflection, a reflection of two things that might be happening at the same time. And that is, you're seeing a lot of family assistance for first home buyers coming to the rescue of their kids. As well as that, it's conflating into the townhouse market. So tell us a little bit about perhaps firstly what you're seeing with the family assistance.
Yeah, so over the last probably I'd say 2 years, we've had a lot more mums and dads being able to jump out and pull equity out from their existing property to be able to help their kids enter into the market for the first time, whether it be for their own principal place of residence or ultimately a sort of family investment themselves where the kids will then become the tenants. But yeah, it's been very much an increasing trend. It's something that's obviously quite sad at the fact that they're having to get the help, but it is like heartwarming as well that parents have at least got that opportunity in their own property where they've been able to help out and assist those getting into the market.
Yeah, just tell us a little bit about the way in which the dynamics, because it sounds like you have been dealing with a lot of these mum and dads helping children, because we've had this reported by a number of agents where they don't know who to talk to because the parents are putting in so much money. The decision making is sort of taken away from the kids, and there are some property buyers that have actually just said, no, I can't deal with this because I don't know who to talk to. Do you get a little bit of that?
Ever so slightly. I guess where mum and dad are putting in, a fairly significant amount, it's definitely going to become a family discussion. And we've always, been a part of that, whether it be offering assistance to the kids or to mum and dad, just our sort of advice. But at the end of the day, it's something that they've got to come to terms with, and we're there to help if they want to do a deal. If not, then, we'll help find them the next one.
So let's get on to the townhouse market, because this has been a bit of a revolution in your marketplace, something that wasn't happening a few years ago, right?
Very much so. I do recall we had hundreds of townhouses sitting for probably close to a year up for sale. We could not get rid of them. They were probably $200,000 less than what they were built for and bought for brand new. So up until just before COVID, we almost could not give them away. So the trend over the last 3 years, 4 years has been that they've just been increasingly becoming far more popular because of that price point, that sweet spot for first home buyers. What was once an entry-level home is now the same price as an entry-level townhouse, if not more. So unfortunately, with everything having gone up, townhouses are becoming the far more affordable option, especially those that have got that lower body corporate fee where the outgoings moving forward aren't all that bad, but it's still getting their foot in the door, whether it be for an investment or first home.
Okay, Rebecca, make everybody sort of cry into their cereal this morning. You said that you couldn't give them away pre-COVID. What was the price point? Because they were cheaper than the cost to build them, you said. So come on, let us all have a little cry.
I do recall I had many townhouses, 3-bedroom, 2-bathroom, up for sale for probably the early $200,000 range, less than 10 years old. I pain myself to say that I didn't buy any.
Oh, the first-time buyers, they are absolutely beside themselves. But hey, that is 2020 hindsight, I guess. Great to chat with you there in Logan, and thank you so much, Rebecca, for coming on to the Real Estate Breakfast this morning, and enjoy your Monday.
Thanks so much. Thanks for having me. Take care.
Remember to follow us on any of the podcast platforms so you never miss a real estate podcast. You can follow us on Apple, Spotify, and Amazon. Know your property with us.
They suggest that actually real estate agents should provide information, so that we require real estate agents to provide that information. Obviously, that means that those real estate agents also need to get that information, but actually to make it part of the selling process.
First of all, congratulations to Jacko that he was, is at that point where he is really planning to make that move. And I think the worst scenario that you could potentially be in is losing your job and then defaulting on those mortgage repayments. And I would always lay out every decision needs to be, the primary guidance is what is right for you.
People don't realise that the credit legislation that we have in Australia gives people the right to ask for their contract to be varied if their circumstances have changed. The customer can ask their lender for whatever variation they need on their contract so that they can meet their obligations. And the lender has to consider that request. If they don't agree with it, they have to say why.
We connect you to the best real estate information across Australia. The Real Estate Podcast.